I like that they have 51 million shares out, right? It's a NASDAQ company with 51 million shares out where management owns 10%. So you're really looking at 45 million shares trading. It's nothing. So in a really hot market, that stock goes from 225 to $3, I think. I mean, that's just the way I see it. I've seen it go to $3 many times before, for weeks. So like it's not like we're thinking about something on a chart that hasn't happened. And this is partially because of the share structure, partially because of the NASDAQ listing, where people get more comfortable with liquidity.
John Feneck, how are you?
I think very good, Andy. How are you today?
Doing really good. Good to see you here. And there's so much stuff that we can talk about in the news. Really, let's go macro here. The CPI came out pretty soft, which was actually surprising to a lot of people. What are your thoughts on that?
Well, it came in 0.1% lower, but in this kind of market, we'll take even a 0.1% down because we have seen the Fed over and over again at every meeting this year talk about inflation retracing to their 2% mandate and not being happy until it does. Many of the people in our sector, when CPI was, 4 or 5% even, were saying this is ridiculous. We're never going to get to 2. I believe that. I don't think we're going to get to 2. I think we'll get closer to 2, and then they will start being able to cut rates and feel better about that. But clearly the headline on CNBC.com, yesterday, 1 minute after the announcement at the Fed meeting was, we expect 1 cut this year, which is kind of new verbiage as far as I'm concerned, where they're actually saying, hey, don't get your hopes up. Like, we're expecting 1 cut. Like, the market has sort of come around to this notion, but I think now that it's in writing, that matters a little bit. And that's why you're seeing some of the names in our sector sell off here, because we were hoping for maybe 2 cuts, right? I would just throw out there to people that are a little bit in despair over what happened yesterday. You got to understand the move in gold here has happened without a black swan event, without Russia escalating, really, without China going into Taiwan, without a crazy, result in the U.S. election that none of us can predict. So there's plenty of opportunities for gold and precious metal to do well as we go forward this year and into next year. And so you look at these opportunities in the framework of a bull market as a buying opportunity, not like, okay, I'm done, and move away from the sector, in my opinion.
Yeah, well, let's talk about that gold and silver, the precious metals, as they had a rough day yesterday and a little bit rough today, if you would. Is that just a technical retracement in your mind, or are we setting up for something bigger? And also, my second question would be: you play this a little differently. Not only do you hold the physical, but you really look at the equities. Yeah, what are you seeing in the equity land here, especially the junior mining scape?
You don't go out there and get predictions like a year from now, where's gold, all that stuff. I would say that you want to see gold hold a big round number like 1,000 or the previous, area that it couldn't break through, which was that 2060 to 2,100 range, right? We don't want to see that break. So I'm hoping that holds it up here. I think it will. But, on the gold equity side, there's so much upside in these names. I mean, many of them haven't moved much at all on a net basis since gold took off this year. I'm not saying they weren't up, a month ago, but now a lot of them have retraced, 15 to 30%. So again, you go back and retest the thesis, you call a CDO, you go talk to an IR person, you check yourself, right? And make sure that the company that you thought you were investing in hasn't changed at all. In some cases, it's gotten better. They may have had news that was supportive, but people are starting to panic sell a little bit in our sector. You're even seeing this in uranium where, at 109 spot in January, now we're at 81. People are not as interested, right? And it's like, wait, if you were interested at 109, you should be really interested in 82, right? Like, this is just how I think as a value manager. Some clients though are momentum oriented, right? And they want that momentum to keep going. It's really just going to make a lot of investors unhappy in our sector, however, because the only thing with real momentum right now, in my view, is something like gold. where it's just been steady, steady, steady for months on end. So that's why we're 41% in gold equity in our portfolio. We talked to you about First Nordic Metal previously. I saw that you did a piece with Taj. Taj was, head of Discovery Silver and was responsible for the ascent of that stock under his direction. So yeah, we own that stock, but we recently talked about them. So I'll pivot into some other names for your listeners. Nev Gold, NAUSF, is something that got my attention probably about 3 or 4 months ago. The stock was just languishing, and did a call with Brandon, the CEO. His dad was the chair of a stock that I really liked 4 years ago called Copper Bank, which is now called Faraday Copper. So Faraday Copper is one of our holdings, and he remembered me from working with his dad. And Brandon's just a very hardworking young CEO, and they've got over 1.5 million ounces of gold, but they also have copper. So it's kind of two ways to win with this story. And the jurisdiction is fantastic. So I really like that stock at this price because it shows on the chart that it rallied from that depressed level that I was mentioning, which is roughly about 23 cents US, all the way to about 34, 35 US, and it's now pulled back to like 31. But it's holding this 29 kind of level. So we call that making a higher low, Andy, where stock goes from 23 to 35 and retraces to 29. That's okay, as long as it doesn't go back to 23 and break 23, right? Because
Right.
then you're technically broken a little bit. But I really don't see that happening. They have had really good news flow since we got into the stock. So that's one that we like. Another one in the gold space I just interviewed with last week was Jonathan Rhodes from Dakota Gold. That symbol is DC on the New York Stock Exchange. Jonathan and the chairman, Bob Quartermain, own over 15% of the float. The float is 99.9 million shares. So, they own, think about 85 million shares being out there, right? It's not a lot. And they're in private land in South Dakota and a very supportive mining state, right? I think permitting is going to go extremely well for them over time, much quicker to do it on private land than otherwise. And when you look at geographically where they are in the state, they're 1.5 miles from the Wharf Mine, which is run by Core CDE. And Core picked this up, if I'm not mistaken, in 2015 for about $99 million. But I remember their stock was getting hammered for it. I mean, people back in 2015 were not happy to see $100 million acquisition and more dilution, right? But that mine has worked out amazingly well for them and has been one of their crown jewels. So I would encourage people to look at how well that mine has produced over the course of 8, 9 years, and they still have a mine life there. So I could see that district getting consolidated with either Dakota getting taken out by Core or vice versa, right? Or just combining forces in some type of JV. Who knows? I just think that they recently put out a report that shows they have 2.3 million ounces of gold. And now they're going to update that resource probably in January of next year. So investors have 7 months here to kind of leg into a position there, because I think they're going to have over 3 million ounces of gold they're drilling right now. So, that's the kind of story where we get 2.3 million ounces going to 3 plus, First Nordic, 2.5 million ounces of gold going to 3 plus, right? Like when you get to that 3 level, in my view, you start getting people more interested.
Got it. You bring up a couple of different things about what you're looking for. One of the things that I'm interested in and wanted to ask you about is talk to me about share structure and what you look for. And then also, I analyze a lot of companies that what they want to do is just, which I want them to do is just drill, and show me the results and throw out a press release. And, I'll buy on a press release if you would. So comment about that. What should these companies be doing?
Okay. So share structure is definitely an important trade for us. It's important to understand where the warrants are priced, where the options are priced. Some companies disclose this on their website through the presentation deck, right? So when you see investor deck or presentation deck, look at that. It's usually the front or the back of the deck, and it basically will show you how many shares are outstanding, When you add in the warrants and options, that's called fully diluted. So that's the bottom number at that slide. That's the number that's more important to me because it encompasses everything, right? So the next question to do is to partner with someone like myself, because many of your listeners don't have time to dig into what this fake means. Now, I will make a call to the CEO on a client's behalf and say, can you tell me a little bit more about the warrants? Like, who owns them? What are the, the maturities here, so I can get a better picture of potential overhang on your stock, right? And so there's a lot to do with share structure that can really hold back a stock or help it, So we look at, you recently mentioned, I think maybe we mentioned, I like that they had 51 million shares out, right? It's a NASDAQ company with 51 million shares out, where management owns 10%. So you're really looking at 45 million shares trading. It's nothing. So in a really hot market, that stock goes from 225 to $3, I think. I mean, that's just the way I see it. I've seen it go to $3 many times before, for weeks. So like it's not like we're thinking about something on a chart that hasn't happened. And this is partially because of the share structure, partially because of the NASDAQ listing, where people get more comfortable with liquidity, right? So that's the share structure piece. And what was the other part of the question?
Yeah, well, let me interrupt you on that, but specifically about Vox. I'm glad you brought them up. I actually asked, because I love royalties, if you would. I actually asked Rick Rule about Vox, and he said what you just said.
Okay.
And which I think is interesting there. So that's yeah, I am not, for our listeners, I'm not an investor yet, but I am definitely looking at considering being an investor in Vox. The second thing is like, okay, so when I interview or talk to a CEO, what I want to hear typically is, hey, what are you putting the money in the ground? And again, I'm going to be the one calling you, or I'm going to be the one doing all this legwork and seeing what the results are. And then I'm going to be a buyer. How would you look at that and approach that? I mean,
Yeah. Okay.
yeah.
I look at it like, when I hear from a CEO, I'm going to put 100% of this raise into the ground in a market like last year, I think that's flawed. I think that you have to do some marketing. You have to have a social media presence. Your deck has to look reasonable, like not like some 10-year-old did it. And so like there's, because if you're asking me to bring high net worth clients to your website, which a lot of people will ask, I don't want to be embarrassed. Like, it's embarrassing. These websites are embarrassing. Like the materials don't look up to speed. Some of them are outdated. Like, I just saw a deck today from March. Like, it's June, guys. Come on. I mean, like, let's try to get like closer to today's dates, so we're not using cash from December 31st, right? Like, in mining, there's a cash burn element, right? It's 5.5 months past that date, but I would say it's a balance. You have to strike a balance between doing some marketing, and marketing can mean social media, an IR person, going to conferences, whatever, right? I mean, upgrading your listing, like a lot of companies need an OTC QB or QX. I help them with that process. I don't do anything for them, but I'll consult with them on, like, okay, I know the 3 CEOs that just went through this 6 months ago. Here's their emails, right? Like, it's a process. And so you want to be on side of the companies you're investing in, because some of these people have a geological background, perhaps, right? And they're not good marketers. They need help in that regard. They know they need the help, but they're not taking the steps to get the help. They just keep doing the same things over and over again, like going to a conference, staying at a booth. And that's part of your job, but it's not all of marketing, right? Today, I think there's a much more social element to everything. If you don't think I'm right, go look at GameStop and AMC recently, right? Like, Roaring Kitty comes back and GameStop goes through the roof. It's like people are watching social, period, end of story.
Yeah, that's a great example, actually. Let's pivot a little bit to copper. So I have a little bit, and I've had a little bit of copper exposure. It's had a great run.
Okay.
I am a long-term bull, if you would, on copper. That being said, and I want to up my copper exposure, but I'm a little nervous because it's had such a great bounce here, or about run since I want to say February-ish. So yeah, what are your thoughts going into the end of the year, really for the next couple of years, on copper, and how would you play copper?
Interestingly, last year, copper was slightly down for the calendar year. Like many people had thought it would have a tremendous year, and it didn't. This year, people kind of gave up on it, and it's having a tremendous year. This is just how commodities work. You know,
Right.
um, everything, including the metals, will try to shake out weak hands. And if you're a weak hand, which is not something to be ashamed of, it's just life. It's like I understand because some of this stuff takes months and years, not weeks, to develop. Right. So if you want immediate gratification, good. If you want to invest in something that's real and tangible and going to be around for ages, like gold and silver or copper, it's like this is what you can invest in as part of your portfolio. It's not all of your portfolio. I think copper is interesting because it trades like an industrial, but also is trading on its supply demand imbalances. And that's kind of what we're seeing this year is people are coming around to the idea that you can't flip a switch and start more copper production. It's very difficult. And where does copper mostly come from? Well, I would argue Peru and Chile are two of the bigger areas of the world. Let's look at what happened in the last few years in Peru. Castillo ran Peru into the ground, right? He's been in jail for 18 months now. But that doesn't mean in 18 months, the woman in charge just flips switches and starts turning on Peruvian production. It's not that way. And it takes longer now that you've had that delay. Copper prices eventually are going to go up, right? Chile had problems over the last year or two. I think some of that's resolved, but when you have disruptions of any sorts, it's going to result in production delays, resulting in supply and demand imbalances. So I think copper looks really good right now. If you look at the big shops like Goldman and Morgan Stanley, they both think 15,000 plus a metric ton by next year. We still have a long way to go in the physical to catch up to that. But the way to play it for us, again, goes to equities. You could buy COPF, which is the copper ETF in the large cap space. That would encompass names like, Freeport, et cetera. We tend to look at the small to mid cap space. We already mentioned Faraday. That's a holding of ours, CPPKF. They're in Arizona, very close to where I am. And Paul Harbage is a good leader there, I think. And they have Lundin money. They've got Lassonde money. It's an interesting junior. But beyond that, I would say, think recent deals I've seen, Surge Copper just put out some news. May 31st, they closed the financing. I think it was just under 4 million. And now they're doing another financing here in June to top off. Usually when you see things like that, it's like a strategic getting involved and demand that comes from a lead investor, right? Someone might say, hey, here's a $500,000 check. So they're going to build a little financing around it, right? You're not going to turn away money in the junior market if it's a good investor. If it's someone like me and you, they're going to hold for 3 or 5 years and $500,000, they're going to be all ears, right? That is, we're going to buy and hold. And when you do a traditional financing, sometimes you get people in the stock that you don't want because they're going to be the types that are going to dump the stock within 4 to 6 months and just cause more problem than it worth. Surge has got a good, situation happening in Canada and a decent share structure again. I met Leaf, the CEO of the company, for the first time just 6 weeks ago in DC, but I know his one of his close business partners because I owned his stock, which was Adventist, which I think you own
I'm
as well.
familiar. Yeah,
Yeah.
very familiar.
So one of our larger holdings, Silver Corp SBM, took out Adventist recently, and Christian introduced me to Leaf to say, hey, you should get to know Surge. And it's been an interesting story that we've been tracking and starting to put some bids on.
Yeah, interesting. And I just want to name drop. I met Christian 6 months ago, and he made a brief intro to Leaf. I've had them on, so
Okay.
great. Yeah, let's talk about oil. Probably my biggest holdings are in the energy sector. So
Okay.
oil and natural gas is probably one of the biggest underperforming sectors in commodities here since the new year, and just overall. Which makes me even more interested. I'm looking to get back even more. I don't want to say double down, but even increase my holdings even more because there's some attractive plays. Just give me a 30,000 foot view on oil and gas.
Well, I'm not really prepared on the price side of both of those commodities to give you like accurate numbers as I would on gold or silver, but I can just say oil's been disappointing this year, right? We all thought we'd see 90 to 100 a barrel pretty regularly. It's not happened, but it will happen. You're going to have a Middle Eastern situation that I think gets worse, not better, and that's going to drive oil prices higher. I hope for the best, but I read the headlines, and the headlines don't look good for that to happen. So I think oil is very well positioned over the next 1 to 2 years. Uh, Gas has been I mean, we got out of our natural gas ETFs months ago, sometime last year. I just couldn't take the price, destruction in some of these things. But there are little subsectors in energy you get behind, or little companies that, will continue to raise their production and in turn increase revenues. One of those that we just met with probably 3 months ago for the first time was Angkor Resources, which is ANK in Canada, ANKOF in the States. Dwayne is a very sharp executive, no nonsense. The project has a lot of merit, that is in the oil space, where they're growing production month over month quite steadily. And they just put out a news release in late May showing this, strength, where they're putting out, I think, a bar chart encompassing the last 6 months of production growth. So I'd encourage people to take a look at their website, Angkor Resources, and look at that press release. Her husband, Mike, is in the field. So it's interesting. They have a lot of their skin in the game, which I love, and they're passionate about it. They also have 1 million ounces of gold in Cambodia, which is a newer jurisdiction for us, but like it's an interesting story because you can win in different ways in that stock. Where oil and gas do well, you can win. Carbon credits do well, which is another part of their business. That's a whole nother story for another day, but that's a part of their product mix. And then you've got gold, which we obviously love. Another one would be Jericho, which I haven't really talked about in a long time because it's kind of been disappointing. But the ticker on that is JROOF, JROFF. And I mentioned it because a few weeks ago, they put out a PR press release that basically said, we're thinking about ways to unlock value in our stock. I love when I see those kind of releases. Doesn't matter. I mean, it doesn't mean that you get immediate gratification. That was a month ago or so, and maybe more. And the stock's done nothing, trading at 12 cents US right now. But they have some very large shareholders that are like buy and hold types. So that goes back to what we were talking about earlier, Andy, right? Where I do the homework to learn these things. This is nowhere on their presentation deck, not, anything that would be considered insider information. It's simply calling the CEO and saying, tell me about your biggest shareholder. What are they like? Are they the type to sell and panic sell, or are they the type to buy and hold? And he says, here's a couple names. And these people, they're like people you would recognize, like with Bond or whatever in gold. And they're not selling because they don't need to. They're worth tens of millions of dollars. So why would someone with tens of millions of dollars buy a 12-cent stock? They obviously see something in it that may or may not transpire, right? But they've got hydrogen, which I think is a really interesting component. They're not just a traditional oil and gas company any longer. So that's when I got interested in the stock about 2 years ago, when they started to get more into the hydrogen space. And now they're thinking about ways to unlock that value within.
Got it. Any other things interesting that you're looking at that I'm missing? If you would, yeah. Anything else that's interesting out there as far as I don't know, just turning over rocks and that sort of thing?
Well, one of the concepts or things that we look for is a story that's near term production, because you're going to get a little more love as you get through the development phase, right? And one that comes to mind is Element 79. It's a new name for us, ELMGF. I think it's ELEM in Canada. Yes. I talked to James now 3 times, I'd say, in the last 3 months. Very sharp. He is basically looking at 2 things. One is his group of assets in Nevada, which is a great jurisdiction, obviously, ranked #1 in the world. And then he's got Peru, which is the near-term production story I was referencing. So I think you could see some surprising things come out of that company in the next, 1.5 to 2 years in terms of the ability to raise capital and put that thing back into production. And the market's missing that. It's trading at a multi-month low as we speak. It's at 12 cents US. It was at 30 cents, I think, like 2 months ago. I mean, when you see things like this, you're just like, okay, is it worth 30 or is it worth 12? It's probably currently worth somewhere,
Yeah.
So I'm not saying it's going to be, something that you should rush at and put like tons of money into at the time. I mean, watch the news, right? You always want to see someone put things out that back up your thesis. But in talking to James, he just strikes me as a very straight shooter, and I think they'll deliver. So that's one that stands out to me. Another that recently got hit by a financing was Premium Nickel, PNRLF. This is a Botswana nickel and copper play, and if you look at Power Nickel, which, as you know, we like a lot, PNPN and in Canada, PNPNF in the States, they're the same thing, nickel, copper, some platinum, but, the tale of two different stories when you look at the charts. It almost looks like an X when you draw them on top of each other, where Power Nickel has taken off on news, Premium Nickel has taken off the other way. But there's a reason, right? They just raised 15 million. When you look at the news flow last year, they raised over 50 million. I would, tell your listeners, show me another junior that raised $70 billion. There's not a lot of these companies out there raising that kind of money. And then you have to wonder, like, why are they raising this much money, right? In my view, what it is Keith is a very sharp CEO. He knows there's a process, to go through as a junior. They're coming out with an MRE, a mineral reserve estimate, coming up here in June, might be July, but that's going to be on Salibi. And then you go through other steps in the process, like maybe a PFS in a few months, different processes, right? They have more than one deposit. But I think their goal is to get all this done by, let's say, Q2, Q3 of next year. And at that point, you've got all of your cards on the table, right? Like if you're a senior, like I'm not going to name names, but let's just say your nickel is usually someone from overseas looking at you, maybe in Asia, right? Like this is what I hear from a lot of different CEOs. They travel to Korea and spend a lot of time in meetings with people that are in the data room. With Keith, he's just not going to sell cheaply, right? So he's raising this money to drill this out, prove out the resource, and then going through the proper process of putting out these reports over the next 12 months. And then he's in a position to do something, right? And like, that's how an investor gets rewarded. When you look at the chart now at 58 cents, you're looking at it and saying, this is a bit decimated, and you'd be correct. But look at the chart on a 1 or 2 year basis. It was doing regular volume over $1. So it's like nothing has changed. The story's only gotten better since that time. So that's what we look for as value investors. Someone who's in a bad position at the moment, but they're going to get to a better place down the road.
Got it. So let's bring it home here. Just give us some final thoughts that you would give investors for the next, I would say, through the summer here. I'm assuming you would say just look at some really good quality names and maybe go shopping. But why don't you tell us what you would think, and then how do people reach you if they want to do business with you?
Sure. Well, I'll start with that. My personal email will be in the show notes, john.feneck@yahoo.com. That gets to me directly. Look, I'm not a charity. I don't work for free. We want to make money like everyone else, right? So we have a newsletter. We've got real-time updates on our website where, yesterday is a great example, right? CPI 1 minute after we said this is going to be bullish for our sector because of the mist, right? And we were correct. Sometimes high net worth people don't want to wait a week or two to get news. And so we've got a real-time email update service that we provide. And we've got paid calls where people can just talk to me about some of the things we talked about today to get more information, right? Hey, give me some more information about why you like nickel right now. Nickel had a really rough year last year. They wouldn't be wrong, right? But looking at names like Power Nickel, I came on your show at 15 cents and was saying buy that thing, and it's now at 50 cents. And So there's a lot of names out there that could do well and pay for that kind of a service within a matter of weeks, I think, maybe months, depending on the stock. That's about us. In terms of what we see for the next 6 months, it's a long answer, but I'll give you a short answer. The Fed yesterday wasn't very supportive. I think they've established that they're looking at one cut now for the rest of the year. That could change. It's just wait and see on data, right? Like that's what they're telling you. I've been saying this now for 2.5 years. Got a lot of negative feedback for it because people thought that we were going to get like much lower rates much sooner. I've always been in the camp, and you can fact check this on Kitco going back to March of 2022, saying that we were going to be higher for longer. And that's one of the reasons we attract credit worth investors is we're telling you like it is. That's not supportive of what I do for a living. Telling people rates are going higher for longer. That's not great for our sector, but I'm trying to tell it like it is so that we can attract clients that are going to be with us for when the sector gets really good, which I think we're setting up for right now. When you see like gold and silver do what they've done, gold broke out, silver confirmed the breakout, copper then followed, right? Like this is all very bullish activity.
Right.
But to answer your question, I think investors have to really look at what's happening with the U.S. election, with the BRICS meeting in October. There's so many things going on. You want to align yourself with someone like myself that can help you through this time to if you go to our website, the first thing you see is that the catchphrase is a tidal wave of information is upon us for a reason. It really is true. It's hard for the average investor to keep up to that.
Got it. John, it's always a pleasure. I will put all of this in the show notes, and we'll have you on again real soon.
Thanks a lot, Andy. I appreciate it.
I appreciate it. Thank you.